2026. It's the year that so many different outlets and experts declared would be the turning point for the use of artificial intelligence in the world of accounting. Well, we're now well past the halfway point of 2026, and as we round the corner into the back half of the year, I think it's the perfect time to look back at what's happened so far, where the industry is headed, and what your firm can do about it. It's Matt from Financial Sense, and in each episode of this show, we explore how both the positive and negative effects of AI are changing the world of accountants and bookkeepers. So join us for the latest episode of AI Accounting, brought to you by Financial Sense. We start off every episode by focusing on a practical application of AI in an accounting firm so you can decide if it's right for you. Today, we're going to talk about how you can create a standard operating procedure, or SOP, for your firm faster than ever by using AI. Now, if you run an accounting firm, you probably have a list of processes that live entirely inside your head. How you onboard a new client, how you handle tax deadline crunch, how you close books at month's end. You know exactly how it's done and how everyone else on your team should do it, but if you're not available, it doesn't get done, or worse, it gets done wrong. That's the SOP problem for accountants. Most firm owners know they need to fix it, they just never do because writing SOPs is tedious, it's time-consuming, and honestly, it's kind of boring. Why write how billable work should get done when you could be doing billable work? But here's the thing, AI has made this almost effortless, and today I'm going to show you exactly how to do it. Before we get into the how, let's talk about why this actually matters. When a process lives inside your head, you become the bottleneck. Every time a team member doesn't know how to do something, they come to you. Every time you're on vacation, things fall through the cracks. Every time you hire someone new, you're starting from scratch training them. SOPs fix all of that. They let your team operate without you hovering. They make training new hires faster. They protect the quality of your work even when you're not in the room. The firms that scale are the ones that document how they do things. But the problem has never been wanting SOPs, it's been building them. Most firm owners sit down to write one, stare at a blank document, and give up 20 minutes later. That's exactly where AI changes everything, and it can be as simple as bringing together Loom and your preferred AI tool. Step 1. Record a Loom video. If you're unfamiliar with it, Loom is a free screen recording tool. Open it, hit record, and just do the process while you talk through what you're doing. Say you're documenting how you onboard a new bookkeeping client. Walk through it out loud. Pull up the client intake form, show how you set them up in your practice management software, explain what gets done on day 1, what happens in week 2, anything else that's relevant. Don't worry about being polished, don't script it, just narrate what you're doing like you're explaining it to a new team member sitting next to you. That's it. When you're done, Loom will automatically generate a transcript of everything you said while recording. Step 2. Paste that transcript into the AI tool of your choice. Once your video is done, grab that transcript and paste it into AI software with a prompt like this. Based on this transcript, write a standard operating procedure for our accounting firm. Format it with a clear objective, a numbered step-by-step process, and any notes about exceptions or common mistakes. The AI agent will take your raw, unedited narration and turn it into a clean, structured SOP that has a logical flow, clear steps, and language your team can actually follow. The whole thing, recording the video, generating the SOP, it takes about 20 minutes or maybe even 30. Writing that same SOP from scratch, starting with a blank document, could take 2 to 3 hours, maybe more. Here's a few things you should do that take this from good to great. First, link the Zoom video inside the SOP. If a team member reads the document and gets confused on a step, they can click the link and watch exactly how you did it. Text plus video is more useful than either one alone. Second, if you already have an existing SOP you like, even a rough one, paste it into the AI tool as an example. Tell it to follow the format. This keeps all your SOPs consistent, which matters when you have a library of them. Third, delegate the whole process. You don't have to be the one doing this. Record the video, then hand the transcript to an operations team member and let them manage the prompt and final cleanup. You spend 15 minutes recording. Someone else handles the rest. Simple, right? Well, here's the honest truth. Most firm owners who hear this say, "That's a great idea," and then they do nothing. So pick one process, just one, the one that gets asked to you about most often, the one where things go sideways when you're not around. Record a Loom of yourself doing it, paste the video transcript into ChatGPT, Claude, or any other AI agent you use, and see what comes out. You'll have a working SOP in under 30 minutes. 30 minutes, that's it. And once you do it, you'll realize how easily you can build out the rest. The firms that figure this out end up with something most firms never have: a business that can run without its owner. Next up, it's time for some of the biggest news in the world of AI accounting. And with all the hype and worry over where artificial intelligence will be used in the world of accounting, I think the question everyone should be asking is, how are small accounting and bookkeeping firms actually using AI in 2026? Recently, the Journal of Accountancy did a review of various small firms and recent reports by CPA.com to understand the real, boots-on-the-ground usage of AI in small accounting. And I think the truth is pretty eye-opening. Specifically, the Journal of Accountancy profiled 4 different accounting firms that each had under 10 employees using AI right now in ways that are practical, low cost, and actually work. One Stop CPA in Fort Lauderdale is a 4-person firm that mostly works with doctors, real estate investors, and entrepreneurs, meaning they have layered transactions, multiple entities, and complicated ownership structures. When a client was navigating a potential merger and acquisition while also relocating to a new state, the firm needed to quickly analyze the state tax treatment of the deal and advise them on payout strategy. To do so, One Stop CPA fed the scenario and relevant facts into Blue Jay, a tax research AI that provided cited, source-backed analysis. They reviewed the output, applied professional judgment, used ChatGPT to organize the findings into client-facing deliverables, including slide presentations, roadmap summaries, and one-page PDF overviews. That merger and acquisitions question resolved in 2 hours, but it would have taken significantly longer without AI. According to One Stop CPA founder Brian Davis, AI is a starting point, not the final answer. This works because it combines AI speed with CPA judgment. One Stop CPA also built a library of reusable prompt templates around repeatable workflows. After customizing an output once, the firm asks ChatGPT, "Can you turn this into a reusable prompt so next time I can get a similar output in one step?" The library compounds over time, meaning that every new workflow makes the next one faster. Next, 6-person firm Agate CPA is focused on tax planning and monthly accounting. But when prospect intake forms were getting too few sales conversions, co-founder Sarah Harris built a better one for herself using Lovable, an AI-powered app builder, and used Claude to embed it in their website. The new form screens for company size, revenue, industry, and whether the prospect has worked with a CPA before, and why they're looking for a new one. All those responses flow automatically into their practice management system. The result was their conversion rate went up 25%. They spend less time on calls that go nowhere and more time with prospects who are actually a good fit. Harris's advice for other small firms: pick one recurring pain point, something that isn't working, something you do repeatedly, something you dread, and open up a conversation with ChatGPT or Claude about how to automate your way out of it. Just pick one thing, she said. That leads us to Cheryl Hannafin, who runs a solo practice in St. Petersburg, Florida, focused on government and nonprofit clients. Her philosophy: use AI to build the plumbing, not to handle client data directly. Her nonprofit clients need rigorous invoice approval processes for internal controls, but the existing options required approvers to log into separate systems, create accounts, and remember passwords, so it's no surprise that clients kept dragging their feet. Hannafin used Microsoft Power Automate, tools she already had access to through her Microsoft 365 subscription, and got advice from both Copilot and ChatGPT to build a workflow. Now, when a vendor invoice hits a dedicated client email address, it automatically triggers an approval request through Adobe Sign. Once approved, the workflow creates the bill in QuickBooks and attaches the signed documentation as an audit trail. No new accounts, no new software for clients to learn, just a frictionless process that also creates a clean audit trail. Total additional cost: $0. And finally, there's High Rock Accounting in Scottsdale, which has 8 people and specializes in CFO and advisory services for tech companies. Their COO, Ashley Roden, wasn't satisfied with the client satisfaction tools they were paying for. Too expensive, not enough useful data for all that money being spent. So she used Claude and Claude Code to build a custom app in 4 to 5 hours that integrates directly with their Carbon project management system. It automatically surveys clients after major feedbacks, feeds results back in real time, and flags which client relationships need attention. No tech background required. The firm's head of tax, who also has no tech background, separately used Claude to build a working prototype of a new client onboarding and tax organizer in a matter of hours. The firm now hosts a regular AI happy hour where the team spends the first 10 minutes identifying one problem they want to solve, then uses AI to build a solution. Here's what each of these firms have in common. None of them have large budgets. None have a dedicated tech team. What they have is a specific problem and a willingness to try. That's the real story here. AI isn't waiting for small firms to catch up. The tools are already accessible, the costs are low, and firms with fewer than 10 people are building things that would have required a developer 2 years ago. The question isn't whether you have resources. It's whether you're willing to pick one problem and start. And I hope this inspired you to give it a try. For this episode's weird AI use case, if you're in the world of accounting, then I'm sure you've either been called or at least heard the term bean counter. Maybe not the nicest description, but have you heard of an AI program whose literally sole purpose is to actually count beans? Well, that's what Starbucks made with their program Automated Counting. Okay, maybe not the most exciting name, but what it actually was is an AI-powered app that Starbucks deployed to its North American stores in September 2025. With the app installed on a tablet, the tablet would then be held up to scan storage shelves with its camera and light detection and ranging, or LiDAR technology. In theory, this would then detect the quantities of milks, syrups, coffee beans, and other products that remained on the shelves, and automatically alert nearby storage facilities of lower than ideal levels so they could be sent refills immediately. The idea was that automated counting would replace hand counts by employees to make the process faster, more coordinated, and done at regular intervals for so-called smarter supply chain optimization. The only issue is that, despite the technology apparently being in testing for years, automated counting never worked right in stores. Workers in stores across North America frequently documented that the app was recognizing some types of products, but not others, miscounting some inventory, and causing an incorrect count to be sent for a replacement. Overall, it was much more challenging and time-consuming than simply doing a manual product count and sending out a request for restocking what was needed. The intent behind the use of AI was clearly to make work easier on store employees and save them time and tedious work. The actual impact? More time spent and much bigger headaches for workers. See, it's easy to create AI that works perfectly in a vacuum. Making software that actually does its job in the messy and complex realities of everyday work, that's much harder. And when a bottle of syrup being a little out of place breaks your really expensive corporate app, it's clear that some aspects of AI just aren't ready for real life yet. And finally, it's the part of the episode where we help you understand an important rule of AI that every accountant should know before implementing AI in their firm. Remember, the fundamentals and true understanding of AI usage is critical to avoiding big mistakes. Today, we're talking about AI tokens and why it's critical that any business using AI as part of their strategy understands what we have come to know as the tokenomics. That's kind of a hard word to pronounce. If you've used ChatGPT, Claude, or any AI tool in your firm and thought, why did that cost more than I expected? Then this is for you. So, what is a token really? A token is a chunk of text, not a word, a chunk. Accounting might be 1 token, reconciliation might be 2 or 3. Every time you send AI a prompt and every time it writes back a response, you're using tokens. Input tokens and output tokens. Both cost money. Here's the part that most firms miss. Output tokens usually cost more than input tokens, so a tool that reads a long document and gives you a short answer is cheap. A tool that reads a short question and writes you a 5-page memo is expensive. If your team is using AI to draft long client emails, tax memos, or reports, that's where the spend adds up, not in the questions that they're asking. This is what leads to the tokenomics and tokenomics, tokens and economy. Get it? Tokenomics is just the economics of token usage, how much you're spending, on what, and whether it's worth it. It's the same logic as billable hours, except instead of tracking a person's time, you're tracking a model's usage. The mistake firms make is treating AI costs like a fixed subscription fee. We pay $30 a seat, so that's the cost. But if your firm is using the API, not just the chat app, cost scales with usage. Tax season can burn through way more tokens than a slow month in July. If nobody's watching that, you get a surprise bill, and one that may be way more expensive than life before AI. There are 3 ways the token cost sneaks up on firms, so watch out for these. 1. Long context. If you're uploading a full general ledger or a 40-page engagement letter every time you ask a question, you're paying to reprocess that whole document each time. That adds up fast across a team. 2. Chain tasks. Agentic tools, the ones that do multi-step work like reconciling a batch of transactions, often make several model calls behind the scenes for one task you see on screen. One click can actually be 10 token transactions. And 3. Nobody owns it. Most firms have no single person tracking AI spending in the same way they track software licenses. It falls between IT and operations and therefore becomes nobody's job. Here are my 3 recommendations. First, treat token spend like a billable expense category, not an IT line item. Assign someone, could be your ops lead, could be whoever owns your tech stack, to review AI usage monthly, the same way you'd review payroll or software costs. Not necessarily because it's going to be huge, but because if you don't look, you won't know when it becomes huge. Second, match the tool to the task. Don't use a heavyweight, expensive model to summarize a 2-line email. Most platforms let you pick a lighter, cheaper model for simple stuff and save the expensive work for the stuff that actually needs deep reasoning. Drafting memos, making complex tax scenarios, multi-client analysis. Those heavy-duty models cost more tokens for every task, even if it's simple. Simple task, simple model, less cost. Third, if you're building or buying agentic tools for your firm, ask the vendor directly. How many model calls does one task actually trigger? A lot of AI-powered tools obscure this. You want a vendor who can answer that question in one sentence, not a shrug. The bottom line is that tokens are the new billable unit for AI-driven work. You don't need to become an engineer to manage it, you just need someone in your firm who treats it like a cost center worth watching. Because right now, most firms aren't watching it at all. Okay, so after all that AI news, how can Financial Sense help your firm? As the #1 practice management software, Financial Sense is constantly expanding to support accounting and bookkeeping firms with an all-in-one platform. And the most recent AI addition can make a huge difference in everyday work. It's the brand new AI File Validator feature, and it's designed to quickly identify when a client uploads an incorrect file and helps them replace it to prevent time-consuming issues on your end. Financial Sense AI Validator reviews the project accounting period, the project name, and the client details to determine if the file uploaded by the client is the correct one. For documents flagged as incorrect, the agent will generate an alert prompting the client to fix the issue themselves while they're still in the portal. This way, the client can quickly fix it, and in the event they keep the file as is, firms will be alerted to it so they can review the document and prevent any further issues. That and so many more features are why more than 10,000 accountants, bookkeepers, and CPAs love Financial Sense. Find out for yourself by scanning the QR code or clicking the link, and I'll see you in the next episode of AI Accounting.